Hello everyone, welcome to the Financial Information channel. In this video, I am going to be discussing my top 5 stocks in 2018. Now I know that we are almost in May, but I just wanted to give you these 5 stocks during the remainder of 2018. And before I start the video, remember I make videos about the stock market, personal finance, and how to make money online. So if you're interested, you can click on the subscribe and the notification bell. And 2 huge disclaimers before I start the video. The first one is to make sure that you do additional research if you plan to invest in each company. And the second one, I do have position on 3 of the following stocks, but I'm gonna be mentioning that in the video. But now let's start with the video. And the number 5 company in 2018, and I do have shares, is gonna be Goldman Sachs. And I'm actually following my own advice when I made a video back in October 2017 where I mentioned Goldman Sachs. I bought shares during April 9 of 2018, and the first thing that I'm going to mention is gonna be the CEO, and the name of the CEO is Lloyd Blankfein. Now he has been at Goldman Sachs since 1994. However, he became the CEO of Goldman Sachs back in June 2006. And one of the huge advantages for him is that he has been working in Goldman Sachs for more than 2 decades. Now, he has been a solid CEO for the company. However, there are rumors that he plans to retire at the end of 2018. And if that happens, it might bring some questions for Goldman Sachs in 2019. Now, I am going to mention 2017 net revenues by Goldman Sachs. And as you see, the investment banking brings 23%. And the investing and lending brings around 20% of the revenue. And when you look at the year-to-year net revenue change, the investing and lending has improved over 61% year over year. Now, one of the most underrated things is that when a company buys shares back, the company needs to time that purchases at the right price. And one of the main reasons is that the stock doesn't become diluted. So in this graph, you see that Goldman Sachs is around negative 20%. That is the best in the business. And when you see the negative 27, that means that the share price doesn't become diluted and it brings value to investors. But now let's take a look at the statistics for Goldman Sachs. And as you see in the screen, it has a market cap of around 97 billions and the price to earning is around 28. The beta is a little bit high with around 129. So it is a little bit volatile. Now for the forward price to earning is around 10.67. Now in terms of profits, the profit margin is around 13% and the operating margin is over 35%. There wasn't a lot of volatility in 2017 and that's what drives a lot of revenue for the company. Now in terms of the balance sheet, it has around 737 billions in cash and around 420 billions in debt. So the balance sheet looks clean and I think the company should be fine for the remainder of 2018. And now for the number 4 company, it's a company that I found really underrated and it is a really good company, and that is going to be Raytheon. And Raytheon, it is a defensive company. It is very similar to Lockheed Martin. However, I do like Raytheon a little bit better than Lockheed Martin. But now let's take a look at the CEO. He became the CEO in 2014 and he has been in the company since 1983. So those are good news for investors. Now Raytheon is a really interesting company and I think it's well positioned for the next few years. Now keep in mind that the company has been over 50% since November 2016 and I think it's the best positioned company in the defense space. And another huge plus is that Raytheon doesn't have a lot of a stake in China. And as you see in the screen, Raytheon has around 96.8% of domestic assets and only 2.1% sales in China. And it doesn't have a huge revenue coming from China, and that is important in case we have more trade wars between the United States and China. Now I don't have shares yet in Raytheon, but I've been following the company in the last few quarters. Raytheon has missed the revenue expectations 4 out of the last 5 quarters. Prior to those 5 quarters, the company hadn't missed any revenue expectations in the last 2 years. And even missing the revenue expectations, the company share price has improved during the last 5 quarters. Now, when you look at rating and statistics, it has around 64 billion in market cap, and the beta is around 0.64, so it's not very volatile, and the price to earning is almost 32. However, in terms of forward multiple, it has around 19.84, and in terms of the profit margin, it has a profit margin of around 7.99% and an operating margin of 13.09%, and it has a good quarterly revenue growth of around 8%. Now, in terms of balance sheet, it has around 3.4 billion in cash, and even though that is negative, they bring around 2 billion in free cash flow. So paying that debt shouldn't be that hard. But now let's go to the number 3 company, and I do own shares in UnitedHealth Group, and that company has been tremendous over the last few years. Now, the healthcare has been one of the best sectors in the stock market in the last 10 years. Just one quick note, the healthcare brought over 15% of the GDP in the United States in 2017. But now let's take a look at the CEO of the UnitedHealth Group. And the CEO is very new. His name is David Wichmann. He became the CEO in 2017. Now, David Wichmann became the CEO in 2017. However, he has been with the company since 1998. Now, UnitedHealth Group has been the largest health insurer in the United States. Nowadays, most of the revenue comes from a business unit that is called Optum. And that business unit is in charge of a lot of things, for example, like data analytics for patients and also healthcare delivery services, and that is very important. Now, one of the things that UnitedHealth has mentioned, they want to fix the provider list for patients, and if they're successful, it's going to be a win situation for both the company and the patient. Now, in terms of the statistics, UnitedHealth is a huge company. They have a market cap of over 217 billions. The beta is really low with 0.76, and the price to earning at this moment is 20.92, and the forward price to earning gets even better with around 15.88. Now, in terms of the financials, they have a profit margin of over 5% and an operating margin of over 7, and the quarterly revenue growth is around 9.50%. In their balance sheet, they have cash over 15 billions. However, the debt is over 30 billions. So they have a huge debt. However, the company brings a free cash flow every year of over 13 billions. And I think one of the things that they need to focus is to pay that debt. Now, one of the news that happened in January 2018, we saw that Amazon, JPMorgan Chase, and Berkshire Hathaway are going to create a new healthcare company. And that brought bad news to the healthcare space, but I don't think it's going to affect UnitedHealth in the short term. And at this moment, that company has a lot of questions, so I wouldn't think that company is going to be effective in 2018. So in my opinion, UnitedHealth should be fine in 2018. Now, for the number 2 company, it's a company that I just mentioned, and that is going to be Amazon. And Amazon is one of the most popular companies in the United States. But now let's take a look at the CEO. And Jeff Bezos is the CEO of Amazon. He founded the company on July 5th of 1994. And Jeff Bezos took a huge different approach than most CEOs. Now let's take a look at the latest fiscal year that the company reported, and as you see net sales, it is up over 31% year over year. AWS, which is Amazon Web Service, only accounted for 10%. The international is around 30%, and North America is around 60%. The operating income is really important, and Amazon was up over 69% year over year. And in terms of net income, it was up over 148% year over year. So based on those numbers, Amazon was a cash flow machine in 2017. But now let's take a look at the statistics. And this is where value investors have an issue with the company. The price to earning at this moment is over 232. So that is very expensive. And the beta is 1.72. However, look at that market cap. It has a market cap of 692 billions. So that is very impressive. Now let's take a look at the forward price to earning. And the forward price to earning is 92.97. So it has a decent forward multiple, but it's still very expensive. Now in terms of the profit margin, it has a profit margin of 1.70% and the operating margin of 2.31%. Now in terms of the revenue growth, it has a quarterly revenue growth of over 38%. And in the balance sheet, it has over 30 billion in cash and over 44 billion in debt. So the balance sheet is not that bad, especially since Amazon has been making a ton of money in the last few years. And now for the number one company, it's a company that I mentioned along with Amazon, and that's gonna be JPMorgan Chase. And in my opinion, JPMorgan Chase is the best bank in the stock market. But first, let's talk about the CEO, and that's gonna be Jamie Dimon. He has been the CEO since 2006, and he has been one of the most respected CEOs in the stock market. The bank assets have improved almost 110%, and the earnings have almost tripled since he became the CEO in 2006. Now, he has made JP Morgan be recognized as a global business. JP Morgan Chase is the number 10 2018 World Most Admired Company on Fortune magazine. And as you see on the screen, the consumer and community banking brought over 45% of the revenue and the 39% of the profits. And in second place is the corporate and investment banking that brought over 33% of the revenue and 44% of the profits in 2017. And in the first quarter of 2018, JP Morgan Chase mentioned that 70% of households in the United States use Chase as their primary bank. And that is a huge deal when you consider that the financial group is very competitive. Now, over the last 5 years, the compound annual growth rate has been over 10% for Chase. The national banks only have 6%, and the super regional banks only have 2%. So JP Morgan Chase has been the leader since we got out of the recession. Now, the plan for the next 5 years, JP Morgan Chase plans to open over 400 new branches and expand to 15 to 20 new markets. Now, in terms of the statistics, JP Morgan Chase is another huge company. It has a market cap of over 376 billion, and the beta is a little bit high with 1.12, and the price to earning is over 17.48, and the dividend yield is over 2%. That is a plus. Now, in terms of the forward multiple, it's 11.26. Now, in the financials, it has a good profit margin of over 26% and the operating margin over 37%. In terms of the quarterly revenue growth, is 1.50%, and in the balance sheet, they have over 985 billion in cash and over 567 billion in debt. Now, one of the huge opportunities, I think that JP Morgan Chase is going to increase aggressively the dividend. They have increased the dividend for the last 7 years, and the payout ratio at this moment is around 29%. So they should be fine of increasing the dividend. In addition, the revenue is going to continue growing in the next few years. Remember that the Fed plans to raise the interest rates in 2018 and 2019. In addition, the new tax plans are going to give them a boost in 2018 and 2019. They plan to have a tax rate of around 19% in 2018 and 20% in the next few years. And I started buying shares in JP Morgan Chase in 2017. And I did mention JP Morgan Chase when I did a collaboration with Nick. I am going to leave his YouTube channel in the comment sections. You should check out his channel. He has an amazing content about the stock market. And those are going to be the 5 best stocks in 2018 for me. Please leave in the comment section below which of the following 5 stocks do you like the most. I know the dollar price is a little bit high for these 5 stocks. I do plan to make another video mentioning different companies in the future. And that is gonna be everything for this video. You can click here to see another video from this channel, or right at this corner to see another video from this channel. And you can subscribe to the channel if you want to continue receiving videos about the stock market. And I'm going to thank you once again for watching the video. Have an excellent day and take care, my friends.